Hello guys, this is the fourth lecture in chapter 1. Fourth lecture in chapter 1, and I'm going to do some exercises for chapter 1. Last time we did two exercises, one 4. We started with 1.4 for the costs, variable, fixed, and total cost and average cost per one. And we did 1.6 to prepare the traditional and the contribution format income statements. So let's move to another question then, 1.7, which is discusses the topic of direct and indirect costs. Let's read the question. Exercise 1.7 from chapter 1. Copen Company's relevant range of production is 18,000 to 22,000 units. When it produces and sells 20,000 units, it is average, or its average cost per one unit are as follows. So we have all of these costs are per one unit. All of these costs are per one unit. The direct materials, $7 per one unit, direct labor $4, variable manufacturing overhead, fixed manufacturing overhead, fixed selling expenses, fixed administrative expenses, sales commission, and variable administrative expenses. Be careful that these costs are per one unit. Now, the required from the question, assume that the cost object is units of production. The cost object is a unit of production. Be careful about the word cost object. And we discussed this word before. The cost object means the thing that I have to allocate or distribute my questions or assign the costs for. So the object can be a product or unit of product. Unit of product can be a machine hour, can be a labor hour, can be kilometer for a car or a mile for an automobile or a car. So the cost object in our question will be the units of production. Now, for number one, assume that the cost object is unit of production. What is the total direct manufacturing cost incurred to make the 20,000 units? And number two, what is the total indirect manufacturing cost incurred to make the 20,000 units? Here, we are discussing the word direct manufacturing costs. Direct manufacturing costs. Direct manufacturing costs. Okay. The word direct, if you remember from the definition of from the chapter, will be the direct costs that can be easily or conveniently traced or tracked to the cost object. So we are talking about direct materials, direct labor in this question. Direct material and direct labor for the unit of production. So the answer will be, let's write down the answers in a blank slide. The direct materials for $7, direct labor for $4 will be only the direct materials for the units of production multiplied by 20,000 units. This will equals to 11 multiplied by 20,000 units. This equals to 220,000 units. Why we choose only these two? Be careful that the variable manufacturing overhead is an indirect. Why? Because the word indirect, it is hard or not easily traced or tracked to the unit of activity, unit of production. So all the overheads is called indirect cost for the unit of activity because it is not easily and conveniently traced to the unit of production. Why we didn't choose the selling and administrative? Because these are non-manufacturing, okay? Why we didn't choose the sales commission? Because it is a selling expense, not manufacturing. Also variable administrative, also it is non-manufacturing. So the answer for number one will be what? Direct material and direct labor. Let's write down the answer. So the answer for 1-7, number one, exercise 1-7, number 1A will be what? Direct material and direct labor only are called the direct manufacturing. If you remember, direct manufacturing costs. Direct manufacturing cost, the first word you have to consider the manufacturing costs, and the opposite will be non-manufacturing. And the second word that we have to choose the direct only, not the indirect. So the answer will be direct material and direct labor only for this question. Direct material, in this case, this equals to 7 from the question, $7 per unit, multiply, sorry, $7 plus the $4, which is the direct labor for the unit. This equals to $11. This will be the direct cost per 1 unit. And then we will say the 11 is multiplied by, how many units do we have? 20,000 units. This equals to $220,000. This will be the direct cost for the production if we have the cost object as an unit, as the unit of activity or unit of production. Okay. Number 2B, sorry, number 1B. Okay, 1B. Go back to the question. Number 1, 2, or 1B, what is the total indirect manufacturing costs incurred to make the 20,000 units? Now, we are talking about also, again, manufacturing, not non-manufacturing. So we have to consider the word manufacturing first, and we have to choose the indirect manufacturing costs. In this case, we have to choose the manufacturing and indirect. We will start from the variable manufacturing overhead, which is $1.5, fixed manufacturing overhead, $5, and that's all. Why? Because the others, the remaining, the selling, administrative, sales commission, variable administrative, all of these are non-manufacturing. We ignore the first two, which is the direct material, direct labor. These are direct, not indirect. So the answer will be only for the variable manufacturing overhead, the fixed manufacturing overhead. So the answer will be 1.5. Let's write it down here. 1, if you like, the questions, and 1, 2. The indirect manufacturing costs are indirect material and indirect labor. Okay. No, we are talking about overhead, manufacturing overhead, and this includes indirect material, indirect labor, and all other manufacturing costs other than direct material and direct labor. Okay, so the answer will be what? The 1.5, and the $5. This equals to $6.5 multiplied by multiply by 20,000 units. This equals to what? $130,000. $130,000. By the way, this will be the cost for the whole production, which is the $20,000. Sorry, units. In other words, if they need the per unit, the $11 will be per unit for the direct manufacturing cost, and the $6.5 per 1 unit will be the indirect manufacturing cost. Okay. The total cost for the 20,000 units, which means the per unit multiplied by how many units do we have to produce. This was the answer for the first question, A and B, or 1 or 2. Note that the average fixed cost or manufacturing overhead cost per unit is $5, is valid for only one level of activity, which is the 20,000 units produced. Okay. Now, for the second question, I will go back to the question. For the second question, assume that the cost object is the manufacturing department. The cost object in this case is a manufacturing department, and that its total output is 20,000 units. Now, the difference between the first and the second question, I'm not talking about the unit, I'm talking about the department itself, right? So the cost object in this case will be the department, and the output is 20,000 units. What is the total manufacturing? What is the total manufacturing cost is directly traceable to the manufacturing department? And the second question, how much total manufacturing cost is an indirect cost that cannot be easily traced to the manufacturing department? Let's do the first one. How much total manufacturing costs is directly traceable to the manufacturing department? Now, think about the question in a way that what are the manufacturing costs that we can add or we have to add to the manufacturing department? If we think about the direct materials, the $7, is it traceable for the department or the manufacturing department? Yes. What about the direct labor? Definitely yes. What about the variable manufacturing overhead? Variable manufacturing overhead. We say for number one, it is not easily traceable to the unit of activity, but is it traceable to the manufacturing department? Yes. The manufacturing bubble, if you like, includes direct material, direct labor, and the manufacturing overhead. Now, we say the first two is traceable for the unit. But if we are talking about the departments, the department of the manufacturing department includes all of these as manufacturing costs. Under the title of manufacturing costs, we can trace, we can say that the manufacturing department should be allocated to all manufacturing costs. Okay, so the 1.5 as a variable manufacturing overhead is traceable to the department, and also the $5, which is the fixed manufacturing overhead for the department, is traceable. So all of these numbers, or four numbers, are traceable for the manufacturing department, and then the cost per 1 unit will be the sum of these four numbers. Let's write down the answer here. For number or question 2.1, they ask us about the total manufacturing costs for manufacturing department. In this case, department, not unit. This is the only difference between the first question and the second question. Okay, so we are talking about manufacturing department, sorry, manufacturing costs related to the manufacturing department. So all manufacturing expenses should be allocated in here. So direct material, which is $7, plus the $4 direct labor, plus the variable manufacturing overhead, which is 1.5, plus the 5, which is the fixed manufacturing overhead. And the key here, all of these expenses are considered manufacturing expenses, and it is allocated easily to the departments, and that's why we include all of these to the department. The total here will be $17.5, and then 17.5 multiplied by 20,000 units produced for that department, and the answer will be $350,000. $350,000. Okay. Now, the second question, 2.2, how much total manufacturing cost is an indirect cost that cannot be easily traced to the manufacturing department? Now, out of these four numbers, do we have any indirect cost to the department as a department was representing an object? We don't have any to be considered indirect costs for the department. The word indirect can be hard to be traced to the unit, not to the department. So all of these numbers are traceable to the department. So the answer for question 2, we don't have any manufacturing costs should be traced as indirect costs when the cost object is the manufacturing department. So the answer is nothing or none. So 2 will be none. None. Why? Because the object here is a manufacturing department. None because we are talking about manufacturing costs treated as indirect costs for an object as a manufacturing department. We don't have any. If we are talking about a unit, then we can say some variable manufacturing overhead and fixed manufacturing overhead can be treated as indirect cost for the unit, not for the department. So for the department, all the costs can be traced, which means can be allocated to the department. Again, if the object is the unit of activity, unit of product, indirect manufacturing costs cannot be traced, and can be treated as indirect costs. Okay. This was for 1.7. 1.7. I will ignore number 3 and 4 in exercise 1.7. 3 is repeated. They are talking about assume the cost object in the company's various sales representatives. The object, in this case, sales representatives, okay? It is not so important because we are talking about manufacturing. But if you like, so here, the answer should be related to the sales representatives, the direct and indirect. Let's do another exercise, 1.8. Exercise 1.8, product cost and period cost. Product cost and period costs. Variable and fixed costs. Refer to the data given in exercise 1.7. Answer all the questions independently. So we will use the information of exercise 7. And the question is, for financial accounting purposes, what is the total amount of product costs incurred to make the 20,000 units? The key word here is what? Product cost. So you are trying to accumulating the costs related to the products. If you want to make a product, what are the costs to be added as a product, not as a period? Okay. So we will say go back to the question. The costs to be as a product cost includes direct material, direct labor, variable manufacturing overhead, and the fixed manufacturing overhead. Under the bubble of manufacturing or product, we need direct material, direct labor, and manufacturing overhead. Manufacturing overhead, we have two, variable and fixed. Both are considered manufacturing, which means it will be included in the product cost. So we will include the direct material, direct labor, and all manufacturing overhead. For this question, be careful that we are talking about the fixed manufacturing overhead up to a limit, up to the level. Okay, so the total fixed manufacturing overhead are treated to the 20,000 units produced. So it is 100,000, which means 5 multiplied by 20,000 units, according to the question. Okay, when it produces and sells 1,000, the average will be like. Now, what will be the answer for 1.8, number 1? Let's add an answer sheet. Okay, number exercise. Let's change the font only. Exercise 1.8, depending on the information of 1.7, number 1, what are the total amount of product costs incurred to make the 20,000 units? Okay. Now we have to pick direct material. The product costs include direct material, direct labor, and manufacturing overhead, right? Manufacturing overhead. For the question, be careful that they give me the variable manufacturing overhead per 1 unit and that the fixed manufacturing overhead per 1 unit, but we are limited to the level of activity. So the answer here will be the product cost will equals to what? $7 plus 4 plus 1.5. 1.5 represent the variable manufacturing overhead. Okay, the variable manufacturing overhead. This total will be 12.5. 12.5 times how many units do we have? 20,000 units. Okay, this equals to 250,000 units dollars. 250,000 units dollars. Sorry again. Now 12.5 times 20,000 units. This equals to $250,000. $250,000. This will be the variable part for the product cost. The variable part. Direct material is variable. Direct labor is variable also. And the 1.5 is the variable manufacturing overhead per 1 unit, which is the 1.5. Multiplied by 20,000 units to have the total variable manufacturing cost. So if you like, this will be the total variable manufacturing costs. Now we have to add the total fixed manufacturing costs. Total fixed manufacturing cost. The total fixed manufacturing costs will be what? Average fixed per unit multiplied by how many units do we have? The average per 1 unit is what? 5. According to the question, we have $5 per 1 unit. Multiply by how many units to be produced? How many units to be produced? We have here 20,000 units, and the answer will be total manufacturing costs. Total manufacturing costs. This will be what? $100,000. $100,000. And then the total product costs will be the $350,000. $350,000 includes the variable manufacturing costs and the fixed manufacturing costs. Okay, the total product cost is equal to $350,000. Note that the average fixed manufacturing overhead cost per 1 unit is 5, is valid for only one level of activity, which is 20,000 units produced. Okay. Number 2. Number 2. Go back to the question. Number 2. For financial accounting purposes, what is the total amount of period costs incurred to sell the 20,000 units? Be careful about the word make 20,000 units, and we are talking about product. We need the manufacturing cost in making, and for the period, it is related to the word non-manufacturing. Non-manufacturing. So we are talking about period costs, and it is related to non-manufacturing costs. Okay. Okay. For the period cost, go back to the question. What are the non-manufacturing costs? Non-manufacturing costs. We have sales commission for $1, variable administrative for $0.5, variable selling, variable selling and administrative, variable selling and administrative and the fixed part. The fixed part. Okay. So all, we are talking about all selling and administrative. The answer in a summary, all selling and administrative should be reported as period cost, as period cost. We are talking about sales commission, administrative expenses, variable and fixed. Okay. Then the answer for number 2 will be like this. 2. And the answer is about period costs. Period costs. We are talking about in title, selling and administrative costs. Okay. So the answer will be what? We have sales commission for $1. We have variable administrative expenses for $0.5. Okay. The point here, by the way, you can say all selling and administrative per 1 unit multiply by the 20,000 units. But to be more clear, we have to calculate first the variable part and then to add the fixed part for the selling administrative. So we have the variable part again, the variable parts, variable selling and administrative, selling and administrative includes what? Includes the commission, which is $1, the variable administrative expenses $0.50, and the variable selling and administrative per 1 unit is equal to what? Is equal to $1.5. And then we will say $1.5 multiplied by 20,000 units. This equals to what? Total variable selling and administrative expenses for an answer will be $30,000. So if you like, the title for this will be the variable or the total variable selling and administrative. Total variable and selling, variable selling and administrative costs. Okay, this equals to $30,000. $30,000. Okay, and then we have to calculate the fixed costs. Fixed costs. According to the question, we have fixed selling for 3.5 per unit, fixed administrative 2.5 per unit. Okay. Fixed selling and administrative, we have 3.5 fixed selling, we have 2.5 fixed administrative, and the total will be $6. $6 multiply by how many units do we have? 20,000 units. Multiply by 20,000 units. This will be what? $120,000. $120,000. $120,000, which is 6 multiplied by $20,000. So the total period costs will be what? The $150,000. $150,000. Again, guys, if we are talking about period, I will explain it again. If we are talking about period, we are talking about administrative and selling and administrative, okay? Selling and administrative. If you go back to the question, what are the selling and administrative here? We have fixed selling for 3.5. We have fixed administrative 2.5. We have sales commission, which is variable. It depends on how many units do I sell for $1. And we have variable administrative expenses for $0.50. So we have two groups, if you like, fixed and variable. For this question, we can say the total multiply by 20,000 and will be the same answer. But to be more clear, I have to identify my answer into variable, and it depends on how many units do I sell. The fixed is already there. If I sell 1 unit or 20,000 units, it will be there. So we have 120,000 as a total fixed selling and administrative, okay? And the variable cost depends on how many units. So if you like, the answer will be 1.5, which is the variable, multiplied by 20,000 units, plus the total for the selling and administrative from the fixed expenses, which is 120,000 units, okay? And the answer will be 150, as we explained, $150,000, $150,000. Okay. The third question. The third question. For financial accounting purposes, what is the total amount of product costs incurred to make the 22,000 units? 22,000 units, and this is important. Why? Because we are talking about variable costs depending on the 22, but the fixed costs we have to pay the 100,000s, which depend on the 20, not the 22. So again, the product, if we are talking about product costs, we will pay depending on the 20,000 units as a fixed cost, as our fixed manufacturing costs or product cost, and it is calculated previously depending on the 20,000 units, and the answer will be $100,000. But for the variable cost, we will depend on the 22,000 units. So again, the answer for number 3, for financial reporting, what is the total amount of product costs incurred to make the 22,000 units? We will say the variable part depends on the 22, but the fixed part depends on the 100, depend on the 20,000 units. Let's write down the answer for number 3. Number 3 will say, number 3, product cost to produce 22,000 units are as follows. Variable costs or product costs is equal to what? Is equal to direct material is variable, direct labor is also variable, and the variable part only for the manufacturing overhead can be considered variable, okay? So we have here $7 plus $4 labor plus 1.5 variable manufacturing overhead. If you like, this will be direct material, direct labor, and the variable manufacturing overhead only, okay? So the answer or the total for the variables will be 12.5, okay? Multiply by what? Multiply by 22,000 units and the answer will be here $275,000. $275,000. Okay, this is the variable parts only to produce the 22,000 units. What about the fixed products, fixed product costs? Between brackets also manufacturing costs, Remember that we have to pay, depending on that 20,000 units fixed cost. We are paying fixed cost depending on the 20,000 units, okay? So if we produce 22,000 units, we still paying for the 20,000 level. So we are not paying depending on the unit here. Rather, we are paying 5 multiplied by the 20,000 units, not 22,000 units. So the answer here will be 100,000 units, $100,000. $100,000. $100,000, and the total will be what? The total is called the total product cost to produce the 22,000 units will be what? $375,000. The point here is the 100,000. Why? Because we are paying fixed depending on the 20, not the 22. But all variable expenses depend on the unit. So if we produce more, then we are paying more. 12.5 depending on 1 unit. But the fixed product cost or manufacturing cost depending on the 20,000 units up to a level. Okay. Number 4, the last one. For financial accounting purposes, what is the total amount of period cost incurred to sell 18,000 units? What is the period cost to sell 18,000 units? Okay. So we are talking about selling and administrative to sell 18,000 units. Go back to the question and try to pick the answer. We'll start with the variable parts. Variable means sales commission for $1. Variable administrative expenses for $0.5. And this comprises 1.5 times 18,000 units. 18,000 units. And more important, this will equals 1.5 times 18. This equals to $27,000 as a variable period. But what is the fixed period? What is the fixed period? From number 1 or 2, we calculated the fixed parts for the selling and administrative. Selling and administrative, we calculated number 2 for 120,000 units. Why? Because we are paying depending on the 20,000 units again. Okay, so it is fixed $6 for the 20, and we are paying already 120,000 units up to the 20. Okay, so if we produce more, we still need to pay the $120,000. Okay, so the answer will be the comprises of the 120 and that $27,000. Number 4, the total period costs to sell 18,000 20,000 units will equals to what? We have two parts, the variable part and the fixed part. The variable depends on the unit or how many units do we sell, but the fixed is depending on the 120,000 units. In all cases, we are paying 120,000 units. Either we sell less or 20,000 units. So the variable part will be $1, which is the sales commission, plus $0.5, which is the variable administrative expenses. This equals to $1.5 times how many units do we sell? 18,000 units. This equals to what? This equals to $27,000. $27,000. And then we are paying in all cases fixed period cost or selling and administrative. We are paying $120,000 calculated in number 2, $120,000. Why again? Because it is called fixed cost. Total fixed cost, if you remember the lectures, total fixed cost is fixed or constant or same regardless of how many units do we produce or sell. So the total fixed selling and administrative will be $120,000. So the total period cost in this case will be what? Will be the total $147,000. $147,000. This was 18. Okay. Moving to another question. Okay, let's do exercise 1.9. Fixed variable and mixed. Fixed variable and mixed 1.9. Okay. Referring to the same data on exercise 1.7. Answer all questions independently. Required. If 18,000 units are produced and sold, what is the variable cost per unit produced and sold? This is for the per one. If we produce and sold 18,000 units, what will be the cost per 1 unit? Okay, so we need to say what. By the way, this question is not talking about manufacturing or non-manufacturing. The question is about what is the variable cost per 1 unit. Variable cost per 1 unit. Okay, so we will say here the variable cost includes direct material, direct labor, variable manufacturing overhead, variable selling and administrative, and that's all. That's all. If you like, variable selling and variable administrative. Okay, because it is given in the question individually. Okay, so just to remind you about the numbers, direct material is 7, direct labor is 4, variable manufacturing overhead is 1.5, variable selling, we have sales commission for $1. We have variable administrative for $0.50, and then the total will be $14, right? $14. Again, the question is about variable cost per 1 unit. The question, all the variables are included in the answer here. Okay, all the variables are included in the answer, right? So we need to write down the answer includes all variable costs, all variable costs one exercise 1.9. Variable cost per 1 unit. Variable cost per 1 unit is equal to what? Direct material, definitely yes. Direct labor, definitely yes. Variable. And variable manufacturing overhead, yes. And variable selling and variable administrative, if you like, okay? We can say if the question gives me the selling and administrative together, we can add it as it is. So the answer will be what? Direct material is $7. Direct labor is $4. Variable manufacturing overhead. Variable manufacturing overhead is $1.5. Now, variable selling, we have sales commissions. Sales commission considered a variable selling, okay? And variable administrative will be $0.5. So the answer will be $14. That's all, $14. And again, the question is, what is the cost per 1 unit? Per 1 unit, okay? So we don't need to multiply the 14 by the 18,000 units that we produce, okay? Because the question is about per 1 unit, okay? The second question, if 22,000 units are produced and sold, what is the variable cost per unit produced and sold? Should be the same. Why? Because we are talking about per unit. So this is number one, variable cost per 1 unit, okay? Number two, if we produce and sell 22,000 units, will be the same. Here, if you like, what is the variable cost per 1 unit if we produce, if production and sales are 18,000 units, okay? Number two, what is the variable cost per 1 unit if we produce and sell 22,000 units? Will be the same answer, 22,000 units. Why? Because we are talking about per unit. Okay? So it will be the same answer. Number three, if 18,000 units are produced and sold, what is the total amount of variable cost related to the units produced and sold? Variable cost, okay? Variable cost related to the 18. Simply, we calculate, or the answer from number one was 14. So the 14 multiplied by 18, that's all. The $14 multiplied by 18,000 units, and the answer will be the total variable cost. Again, if 18,000 units are produced and sold, what is the total amount of variable cost related to the units produced and sold? So the answer here for number three will be variable cost per 1 unit $14 multiplied by number of units, which is 18,000 units. So the variable total variable costs will be 14 times 18, and this will equals $252,000. $252,000. Okay. Number four. Number four. Number four asks about what? If 22,000 units are produced and sold, what is the total amount of variable cost related to the units produced and sold? So same question, but we are talking about 22,000 units produced and sold. So 14, again, the target for the question to just to show you that the $14, which is the variable cost per one unit, is constant. So the 14 will be multiplied by 22,000, and the answer will be what? 308,000. 308,000. Okay. The key to answer these questions, just to stress about the key for each question. They are asking about here the total variable cost. Remember that the variable cost per one is constant. So we are using the 14 in the two questions, okay? Number five. Number five. If 18,000 units are produced, what is the average fixed manufacturing cost per one unit produced? If we produce 18,000 units, what is the average fixed manufacturing cost for unit produced? The key for this question and the remaining questions is to calculate the total fixed cost or manufacturing overhead costs for the question. We have an average manufacturing overhead for $5, okay? And we say that the number of units produced were 20,000 units, 20,000 units. So we have total fixed manufacturing overhead for $100,000, $100,000. Remember that we are fixed, or we are talking about fixed manufacturing overhead. We are paying $100,000, okay? So the average fixed manufacturing overhead cost per one unit is 5, is valid for only one level of activity. And this is the key for the fixed manufacturing overhead, okay? Now, if we believe that the $100,000 is paid already for a level of 20,000, then we have to say, if we produce 18,000, the $100,000 will be divided or allocated to the 18. So the average will be $5.56 per one unit. If we produce more, then the fixed manufacturing overhead per one unit will be less, okay? So number 5, and I prefer to read number 5 and 6 again, or together, let's say. If we produce number 5, if 18,000 units are produced, what is the average fixed manufacturing cost unit produced? Number 6, if 22,000 units are produced, what is the average fixed manufacturing cost per one unit? Remember that we are paying 100,000 as fixed because it will be constant for the level. So if we produce the 18, the average per unit will be higher than if we produce the 22. Then the number 6, if you like, the answer will be $100,000 divided by 22,000 units, and the average will be 4.55, okay? Let's write down the answer for number 5 and 6. Five. Okay. Average fixed manufacturing cost per overhead cost. Overhead costs per unit will be what? Will be 5, right? $5. $5, right? Number of units produced, number of units produced. Number of units produced. Be careful here that I'm paying already for the level of $20,000 as a fixed cost, not variable cost. So I have to pay fixed expenses for this level. If I produce less than 20,000 units, I have to pay depending on the 20,000 units. So the total fixed manufacturing overhead will be $100,000 regardless of the level of the production. Okay. So in number 5, if you like, the average fixed manufacturing overhead, will be what? 100,000 divided by the 18,000 production. Okay. If you like, we can write it down. The average manufacturing, fixed manufacturing overhead will be the total fixed manufacturing overhead divided by number of units produced, which is what? 18,000 units. And then the average will be 5.56. Okay, 5.56. 5.56. Now be careful, or let's move to 6 just to stress what is the meaning of the total, the average fixed manufacturing overhead. If we produce more than 20, we still need to have to pay the 100,000. So number 6, the question is, if we produce 22, what is the average fixed manufacturing overhead per 1 unit? So we will divide the 100,000 here for the 22, not for the 18, the 22, and the answer will be less. Why? Rounded to be 4.55, which means if we produce more, the total fixed manufacturing overhead will be distributed in more units. But we are not paying the fixed manufacturing overhead depending on the per unit. So we are paying the 100,000 only up to the level of 20,000. Okay, like the rent, if you like, the rent is paid regardless of how many units they produced or sold to the factory. Similarly, we are paying the fixed manufacturing rate depending on this level, which is 20,000. If we produce less than 20, we still need to pay for the 20. If we less more than 20, then the fixed manufacturing overhead can be distributed in more units. So if we produce more, the fixed manufacturing overhead per 1 unit will be what? will be less, and this will be the answer, 4.55. Go back to the question. If 18, number 7, if 18 units are produced, what is the total amount of fixed manufacturing overhead incurred to support this level of production? Should be the same. Why? Because I'm paying already the 100,000. So the answer is same. The total fixed manufacturing overhead remains unchanged, which is 100,000. The last one, if 22 units are produced, what is the total amount of fixed manufacturing overhead incurred to support this level of production? Again, just to stress, the meaning of the fixed manufacturing overhead will be the same. Number seven, the answer is 100,000, same as unchanged, if you like, unchanged. And number 8, if we produce 22 or 18, this will be the same answer. So number 8, the answer is also 100,000 unchanged, because the fixed manufacturing overhead are paid depending on a level of 20,000 units. We are paying 100,000 regardless of the production. If we produce 18 or 22, we still need to pay for the 20,000 units, which equals to 100,000 units. Thank you very much for today. We finalize these two exercises. These two exercises are also important to give you an idea about the product period, variable, fixed, and per unit cost. Thank you very much for today. Thank you.